By far, the easiest and cheapest way to make some quick passive income is through dividend stocks. But understanding which dividend stocks to actually add to our portfolio is tough. So this is why I've got 10 dividend stocks for you today to break down my favorites. So let's not waste any more time and get into the video. Before I get into today's video, make sure to check out my Patreon account where you guys can get exclusive access to all the different stocks I'm looking into and all of my portfolio moves that I'm making. So make sure to check it out. Link is in the description. Let's jump into my first stock now, which is Starbucks. Starbucks, this coffee making giant of a business, offers a 2% dividend yield. While it might not be the highest it can offer a great deal in stock appreciation. Now, with the growth markets such as China behind it, there's a strong possibility of this company performing well over time. And then to add, with the strong cash flow generation that Starbucks can produce, the ability to pay out the 2% dividend is very safe in my opinion. Now, the great thing about Starbucks, I think for beginners, it's a really easy business to understand. We know they make coffee, we know the different markets that they operate in, and we know the customer loyalty for Starbucks is very high. And then when you consider the dividend yield and we can consider that the stock is a very safe stock to own, it's definitely one you want in your portfolio for your first stock. On to the second stock now, we're talking about Realty Income. Now the stock is down 70% on the year and it currently offers a 5% dividend yield. While housing has been in a difficult place with all the interest rates, due to the fundamentals of the housing market in the US, they are undersupplied with the amount of houses that they actually have. And this ensures that the long-term prospects remain strong. And then to add, we're already seeing an increase in new home sales as consumers readjust to those higher mortgage rates, which is an extremely large tailwind which can benefit Realty Income. Now, with expected cash flow totaling around 2.8 billion for the year or 2024, this company has huge growth potential alongside the stock. So this is another reason why I would consider Realty Income for your second stock in your dividend portfolio. The third stock now, and that's Camping World. It offers a 7% dividend yield, and you're buying this company with a top-class CEO who consistently delivers year in, year out. The stock has been hit hard, down almost 50% on the year. However, fundamentals are still strong. And with cash flow of the trailing 12 months at 94 million, dividend is again safe. And with that 7% dividend, you get to hold on to that while potentially seeing the stock appreciation. So the reason why Camping World is my third stock is because it's so consistent. And then we have the macroeconomic changing, which could offer a huge tailwind in terms of stock appreciation. With that 7% dividend yield, there's a great chance that we make a lot of money on this stock. And that's why it's my third stock in the dividend portfolio. On to my fourth stock now, and that's Bank of America, one of Warren Buffett's favorites, and it offers a 3% dividend yield. Now, what I like about Bank of America, that it's consistently buying back its own shares, giving us that larger piece of the pie. And it's arguably trading at its fair value to being undervalued with a price to book ratio below 1. And that historically trades closer to a 1.5. So you could see some nice share appreciation alongside that 3% dividend yield, which is exactly why it's my fourth stock in the portfolio. Now, my fifth stock now is Apple, the 3 trillion monster of a company which offers a 0.5% dividend yield. What's great about Apple is just about everything. It continues to deliver, and share price of this company has been rallying hard as of recent. However, all things considered, whenever this stock pulls back, you can't go wrong by picking up a few shares. And then the innovation and ecosystem of Apple is phenomenal. And with over 160 billion in cash, there's so much optionality, whether it's buying back more shares, increasing the dividend, or using it for new projects. It's another great company to own because it's very easy to understand for the beginner investor. And it offers a nice amount of share appreciation because they buy back so many shares. And then that dividend I'm expecting to increase as their cash flow increases with how profitable that company is. They have so much cash on hand that it wouldn't surprise me if we saw a dividend increase. Number 6 now, and that's JP Morgan, ticker JPM, offering a 2.5% dividend yield. This stock is arguably the best bank stock in the world. And with the recent news saying that they don't see a recession, this will always be good news for bank stocks. It's a great long-term company to own with the potential for that stock appreciation, which is always what we want to coincide with that dividend yield. And that's another reason why JP Morgan is going to be in my portfolio. My number 7 now is Wendys stock, offering a 4.63% dividend yield. The restaurant is killing it right now. After recently reporting earnings that were very strong, with new stores opening and also the potential for later nights that they're open, they are driving sales very nicely. It's in a highly competitive market with a huge total addressable market, which is the most important thing. And Wendy's stock has a lot of room to grow. At a $4.4 billion market cap, the expansion into Australia and new product lines being released increases the run path for this company, which is already very long. My number 8 stock now, and that's Waste Management. It's the easiest stock to own out there, as we know there's not a lack of waste. What is great about a stock like this is that macro factors won't impact it, and the inelasticity of Waste Management is nothing like any other business. While that dividend yield is slightly less at the 1.75%, let's just take a look at the stock chart and see just how immense it's been over the last 20 years. And there's not a lot more to say about this stock. It's just one you need to get added to your dividend portfolio. My 9th stock now is Ford, offering close to 5% dividend yield, and at a $50 billion business, it's a car giant, as we know. There's lots of talk of this company being left behind by companies like Tesla and other EV makers, but in reality, production matters, and Ford have that in abundance. They are also heavily already invested in the EV market, and they're already scaling electric cars. It's just a case of that continued improvement. And while we sit on that 5% dividend yield, I still think this stock can outperform as well with that share appreciation with the EV market growing. It's a more controversial stock, and I could understand why some of you may not want this stock in your portfolio, but I believe people are underestimating the power of Ford, their production capability, and their ability to gain market share in the electronic vehicle market. While they obviously operate a lot in the ICE market, I think underestimating this company would be a big mistake. Now, my final stock is HP. HP offers a 4% dividend yield, and it trades very cheap at a 12 PE. It's a company that buys back tons of shares, and the company benefited heavily in 2020 with lots of remote working on sales of new PCs and other electronic devices. This led to huge and tough comps in 2021 and 2022. However, that is slowly normalizing this year and into the next year. And I'm expecting to see improvements in the numbers. And while we wait, we get to that paid 4% dividend yield. It's not a bad stock for that number 10 slot. If you guys enjoyed this video, make sure to drop a like, subscribe if you haven't already, and leave a comment letting me know your thoughts about all the 10 dividend stocks. And I'll see you guys in the next one. Thanks for watching.